welcome back. So today we're going to be talking about moving average, and this is the part two of the market structure, right? So like I said in the last video, you can identify your market structure using two things, right? You could use either your candlestick charts, right, or your moving average, which I'm going to explain to you guys how to get this moving average in the charts and how you're going to use them to identify what trends the market is in, or what particular trend the market is in, right? So we have to deal with first of all we have to do what a moving average is, right? And then that's what I'm going to explain right now. So let's start with what is a moving, what's a moving average? Right, so moving average calculates the average price over an X number of period, right? Again, a moving average calculates the average price over an X number of period, right? So what do I mean by that? Let's give, for example, we have five, right? We have 5 period moving average, right? Let's say we have 5 periods, because over an X amount of period, we have 5 periods moving average or MA, right? So we have the 5 period moving average, and now we want to calculate it. So let's imagine this is our candlesticks, right? So this is candlestick. This is candlestick 1, right? This candlestick 2. You guys should excuse my drawing. This candlestick 3. I'm not really an artist. I'm just a correction. This candlestick 4, right? And then this keeps going higher than the previous one. And this candlestick 5. Right, so let's imagine we call this 1, we call this 2. Sorry, that's all for me. But so that was 1. This should be 2. This should be 3. Right, this should be 4, and this should be 5, right? I think I should bring 3 tools the same. Yeah, I think I should bring 3 tools the same. And then we can erase this. Good. Right, so let's imagine this is our 5 candlesticks, and then we are trying to find the moving average, or we're going to depict a moving average over these 5 candlesticks, 5 period right? So how are we going to do that? How are we going to get the calculation, right? So what we're going to do is we're looking for the average, right? Because like I said, the moving average calculates the average price over an X number of period, right? Over an X number of period. What's the X number of period? 5, 5 period, right? So we're looking for, well, we're trying to calculate the average price over a 5 number of period, right? This has to do with like a little maths and all of that. Now, if you want to find the average of this number, which is 1, 2, 3, 4, 5, let's say $1, $2, $3, $4, 5, and market moving upward with $1 adding, right? So now, if we're going to calculate the average of this, the total or the average is going to be, we can guess, 3, right? The average is going to be 3, which is this. Now, why is the average 3? If you calculate this plus this plus this plus this plus this equals to a particular number over the total of this, which is 5, 5 period, and which obviously the average. So the answer is going to be 3. That obviously this is 15 over 5, 3. Do you understand? Right, and then three. So let's imagine we put a dot at the three, right? I'm just showing you guys what the indicator or the computer does. Let me clear this out so that you guys don't get confused. Right. So I'm just showing you guys what the indicator does. Then it's calculated. Okay, let's use this as an method. Right. So let's imagine we add one more candlestick, for example, right? We add one more candlestick and then okay, I think this candlestick is not gonna be good. Right, so we add one more candlestick and we call this candlestick six. Right, so we call this candlestick six. Now we're trying to look for it within these six candles, right? So how are we going to calculate it? We're going to start with the most recent. We're going to start with the most recent, so which is 1, 2, 3, 4, 5, right? 5, that's from here to here. So we're going to be calculating from 2 to 6, but then this is 5, this 1, this 2, this 3, this 4, this 5, right? So we're going to add this and then we're going to divide it by 5, right? And then our answer or our total is going to be 1. Who can guess? 4 exactly, right? Which is this. And then if we put a dot right there also. So by the time we start connecting these dots, right, it's going to look something like this. Do you understand? So that's how your moving average is being formed, right? By the time we start connecting the dots and then it's going to look something like this. Do you understand? So for your moving average, we need to calculate the average price over a X number of period, right? An X number of period. So most our most common moving average used for the market structure, or used to determine market structure basically is 200, right? So I'm going to show you guys how to see where you can find your moving average and then how it's going to work for you. So you just come up to this is your time frame, this is your candlestick, this is your indicators, right? In the indicators, you just search for moving average, right? You're going to search for moving average and you're going to see a lot, right? You can use simple, but do you understand? You're just going to choose one moving average that you're going to use. You can use any of these moving averages too, right? And then once you've gotten a moving average, you're just going to come to this particular place and make sure it's on 200, right? You can see where I tapped. Make sure it's on 200 because you need your 200 moving average. You just voila, right? So for our uptrend, right? Like I said before, for our uptrend, our moving average is going to be above, right? Our price is going to be above our moving average, right? So let me mark that out, right? So you guys can see. So for the uptrend, right? Price is going to be above, yeah, above the moving average of the ME, right? For our downtrend, price is going to be below, right? Price going to be below our MA, our moving average. Now for a range market, for a consolidating market, price, the price and the moving average and MA are going to be on the same level. Are going to be on the same level, right? And that's just it, right? So we can use our moving average to determine our trend, right? And we can use our moving, we can also use our structure, our candlestick structure, that's our lower highs and high to determine our trend also. So for the moving average, right, our 200 MA, if we want to find our uptrend, we know that price is going to be above the MA, that's above the moving average. Now, so where do we see price above the moving average? Right here, price is above, this is our moving average, right? Which is below price. Price is above the moving average. And you can see market keeps going up, right? You can see market keeps going up because it's above the moving average. And then by the time price begins to go below our MA, right? Price begins to go below our line, our moving average. You can see we're having a very short downtrend, right? You can see we're having downtrend and all that, right? So I'm going to show you guys another example. Just show you guys another example, just so you're going to see, right? So it's that simple, right? It's that simple. Once you see price above our moving average, we're on an uptrend, right? You can see it's very clear. Price is above it, we're on an uptrend. Price is still above it, we're on an uptrend. The market keeps going up, right? Market keeps going up. Market keeps going up, right? Because we are on an uptrend and price is up, it's still so everything. It's basically that's how it is, right? It's not hard, it's not complicated. It's just very easy, very nice, and you could obviously determine what trend you are in the market, right? So right here you could see the price and the moving average are in the same level, and this is our consolidating market. You could see within this range, market did not really do anything. Market was just going up and down within the same level, did not really go up anywhere, right? So this is our ranging market. This is when our moving average and our price are in the same level, right? They are in the same level. And the moment you see this, you don't do anything. The moment you notice this, you don't do anything. And you leave the market to act out the way it wants to act out until we are done with our range. Right? You can see this price is below the moving average and we are on our downtrend, right? And anytime you see price below the moving average, obviously you're not just going to run into sales, but it's an indication that there are possible sales that you could get, right? So you just have to like add some certain other confluences, which we're going to go over in our next class. So you just need to add some certain other confluences, and then you're going to sell. But probably if you add your moving average to your price action, like I told you guys earlier, right? So you could see your lower low, your lower high, your lower low, your lower high, right? And then you can be selling at your lower highs, because you always want to sell at a very good price. Anytime the price comes up, that's when you need to sell, because then you want to sell down. So anytime the price comes up again, you want to sell so that price can come back down and all of that, right? So you definitely see that price is very clean and everything is moving as planned. Right, so let's go for a quick recap, right? So let's go for a quick recap and all of that. So we just finished market structure, right? So we just finished market structure and we said that market structure is used to define market conditions, right? It's used to define used to define market condition or know when to buy and when to sell. Right. You understand? So market structure is to define market condition or to know when to buy and when to sell, right? And we also know that we have three types of market. We have the uptrend. So we have the uptrend, we have the downtrend, and we also have the ranging markets, right? So we have the uptrend, we have the downtrend, we have the range market, and we know we can use our candlestick We can use our candlestick charts or moving average, right? To get, we can use our candlestick chart or our moving average to get what trend the market is in, and we can take advantage of that. Right? So just by using our 200 moving average, we can know when the market has changed a trend, right? We can know if the market is on an uptrend, or in this case, if the market is on a downtrend, because the moving average right now is above price below the moving average. So we know it's on a downtrend, and then we're just going to look for opportunities to keep selling until we see otherwise. Once we see otherwise, we need to find out what the market is doing for anything. Right here, you can see the market is above the moving average, moving average below the market. So you can look for opportunities to buy until otherwise again. Right, so I hope you guys have learned something from this, and we'll see you guys in the next class where we teach you more things or more influences before you can eventually go into the market and start making money. Thank you guys.